Hello guys, welcome to another video from Duking's FX Academy. Alright, in this video we're going to be discussing on why breakout strategy is so dumb. Alright, so this topic sounds so very interesting, and I'm going to take up my time to explain why breakout strategy is so dumb. Right, so the breakout strategy is one of those popular strategies that are used by so many retail traders trying to catch trades when they break out of a kind of consolidation or a range. And this is why I say this is dumb. Okay, I'm going to show you every proof why it's a very dumb way of trading, because I have used it before. I'm talking out of experience, and I've also back tested it for a long time, and I've seen that it's a very dumb way of trading. So this is how breakout strategy works. Right now, a breakout trader is gonna enter this trend. Now this is an uptrend. I guess we ought to be buying. Now a breakout trader just wants to wait for something like this to happen here, right? And once it breaks out, he takes his buy position here and he sets stops here. All right, this is how breakout traders do trade, and this may seem as a smart idea, but now this is what happens after taking a buy. After you see a breakout up right there, do you know what happened next? Let me show you what happened next. Because price moves in a wavy level, like price moves in waves. So after this impulse correction, you entered in an impulse, so a correction is bound to happen, and now nobody knows where this correction is ending. All right, nobody knows if it's going down here, and sometimes it gets up to here, which is almost 61.8 level on a fib, and on a supply demand zone is normally found at this sharp move right there. So where is it coming to retest on your stop loss before going up? All right, so this is one disadvantage of trading the breakout strategy. And that reason for trading the breakout strategy is this. Now we have what we call liquidity grab. Using a breakout strategy is going to make you always get stopped out when market is trying to grab liquidity. For instance, we have a downtrend this way. Now if we happen to locate a good point of interest up here, for instance, and this point of interest has to be mitigated before it continue going to the downside, breakout traders won't get this, because if on the higher time frame this is showing, on the lower time frame, when this price is on its way going up to meet here, it's not going to go straight. Most times it's going to go in waves or so. All right, so on a smaller time frame, what you start seeing is small trend waves forming to go and tap here and cause a fall to create an overall lower low. Right, so what do breakout traders do? All right, let me show you what breakout traders do. Breakout traders, they come here and they don't see all of this. Okay, they see this new uptrend forming, so they are after breakouts from a particular zone. As a breakout, they are taking their buy trade here or here. Okay, and what do they see? It keeps them happy for a while, and then it falls to the downside. All right, so breakout trading is kind of very uh, I can't advise you to trade with breakouts trading. All right, so even in a consolidation in a range, stuff like this do happen, and breakout traders are going to be getting involved, and all these manipulations are to get retail breakout traders. Right now, you start seeing a range like this, like this. Okay, so now in this range, you see what they do. They actually come here and use a rectangle and box all of this and say, okay, if it breaks out of the range, I'm gonna buy long. If it breaks down out of the range, I'm gonna sell. Okay, so what happens most times in this is this: most of this accumulation you see right here, a Wyckoff schematics, okay, trying to play out. Now, if Wyckoff is trying to play out like this, all right, like this, something like this, something like this, then something like this, something like this. Now, if you watch this, this is actually disrespecting um um equal highs and equal lows, right? So you see out of this range, now this is actually a schematic. In real life, it's more complicated than this. So you see price trying to do make its buying climax, come down to do secondary tests, and it's looking for a way to go and make a U-turn, right? So while it's going up there to make a U-turn, what are breakout traders doing there? Buying here. What happens? It goes down and hit a stop loss. All right. When it goes up again to make a UT, they are buying there and it goes down to hit a stop loss. And when it's going down right here, okay, they when price is about to deliver, they distribute rather, they come back here and enter a sell, right? It keeps them happy for a while, reverses, hit their stop loss and move down. So you have, as a breakout trader, you have 3 consecutive losses in this full setup. All right. So it's a very dumb idea, all right? Trading breakouts, okay? So if you want to be profitable in trading, I advise you learn how to understand simple trend. You follow the trend, look for point of interest, understand liquidity imbalances. All these are there to help you, okay? So break and retest, breakout strategy, and all of that. There's a whole lot to it, okay? So now another thing again, you should know why you should avoid breakouts. Trade is liquidity grab in a different format, okay? This other liquidity grab is different. Hope we all know that in the market, whenever we have 2 equal highs, smart money is actually looking for a way to take out all the stop losses and all the buy stops above these highs. They are looking out for a way, like they are hunting for stop losses with touch. All right. So when you see stops like this, you come out and you see stops like this again, maybe something like this, something like this, something like this. Then you now see a breakout to the upside, okay? And then after the breakout to the upside, you see stuff like this again, all right? And all of those random movement, okay? This is called manipulation. Now let's look at it. We see it happen live in GJ, all right? This is why I actually waited to see watch it happen before I took my shots on GJ. Okay, so let's look at it. Now, on was it on Friday? Yeah, on London session open, I was in the market, right? I identified this equal highs here, and I knew that okay, buy enough buy stops should be above here, and those selling shorting from here, looking at triple tops are going or whatever they call it, are going to be setting their stop losses above here and shorting inside this range. Okay, now upon seeing this, I know what smart money is gonna do at that London session open, because in London session open, there's so much volume in the market, so much volume in the market that's gonna make so many things that ought to happen slowly happen so fast. Okay, if you don't catch it, you get left out. So right here, I saw okay, this way I saw price right here. Okay, right here. This is where price was right here when London opened right here. Then boom, as price opened, price started going up with speed. This week you see right here was a green bullish candle looking very strengthened. What will breakout traders do? Start buying from here. But what did you just see? Price went to clear up liquidity. Like I told you, whenever there are equal highs, price will look for a way to clear out liquidity and then go exactly opposite direction. So once it cleared the liquidity, then I started shorting. And you see price went straight to my take profit. And right here was my buy order waiting again to take, because this was an order block, a demand zone. So I took this buy and it went up straight. Okay. I took this buy on one of my accounts and it was so superlative. Okay. So That was for GJ. So what I'm trying to let you understand is that whenever you see double tops, double bottoms, there's liquidity on that, and price will want to go there to clear all these tops. Okay, after clearing it, then price will not go in the opposite direction most times. So it happens too. Whenever there you see a correct, a clean trend line, price will be looking for a way to break out the trend line to validate the trend line so that it can distribute properly. Okay, so thank you for watching this video. Do well to like, click on the like button, and subscribe to this channel for more educational content on the financial market. All right, stay safe, guys. Thank you for watching.